It's pretty remarkable, the crypto sentiment right now, specifically in regards to Bitcoin. Seems like anyone that was on the alt train has now moved into the Bitcoin train, and it's just it's pretty wild out there right now in terms of bullish sentiment. And I would say, like, so I see a question here about, I talked previously, like over the last year, that Bitcoin could potentially decline by as much as 85%. That data point came from past cycles about how much it dropped in each of the past cycles. It was somewhere around that. I actually think that it also has to do with how much of a decline we saw in Amazon. If this was the .com bubble bursting in crypto, it was also looking at Amazon as being kind of the child of the .com bubble, and Bitcoin obviously being the one for crypto. And so if you look back at Amazon back in '01, it bottomed out down about 85+% when all was said and done.
The market dynamics and potential risks in both the cryptocurrency and stock markets are just a few of the issues veteran trader Gareth Soloway highlights in today's interview. The contrast between global economic data, which has been notably poor, and the relatively strong US economy, he finds intriguing because the US dollar is not gaining significant strength. Soloway suggests that the lack of a strong dollar bid may indicate the potential for a larger downturn when the US economy eventually weakens. He also discusses the de-dollarization and diversification away from the US dollar, highlighting recent comments by Treasury Secretary Janet Yellen. Soloway is also concerned about the lack of panic in the market, despite higher rates from the Federal Reserve and the unrest we're seeing in major powerhouse countries. He also mentions the SEC's recent dismissal of Bitcoin ETF filings, which could contribute to investor hesitancy. Soloway, however, does point out that the interest in undervalued altcoins is being driven by the strong performance of the stock market. Let's get right into the latest interview, as Soloway gives us his market update for the next few months, and what we can expect in the crypto and stock market in the last half of the year. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here. Let's get right into the video.
Globally, the economic data has been ridiculously bad, right? I mean, Germany recently, the UK with inflation, Japan with inflation. We know China's struggling, their economy's struggling. And so what's kind of intriguing to me is that the dollar's not getting a bigger bid, considering that the economic data here has been really actually pretty good comparatively. So it's almost like, okay, so if that's not giving the dollar a bid, does that potentially mean that when the US economy starts to weaken, which, whether it's in 3 months, 6 months, a year, at some point it will, does that then mean, do we have a bigger rollover? And again, it is kind of interesting with the chatter about de-dollarization. Janet Yellen recently saying that, people should actually diversify away from US dollars a little bit, because it probably won't be the only currency out there. The economic data globally has been really, really weak. You'd assume the dollar would be ripping right now. Although I will say this, is that we know the US dollar does well when there's panic, right? When there's panic. And if you look at the VIX, and in fact, I'll pop up the VIX here, it's anything but panic. And I mean, you have riots in France right now. You have, there's lots of stuff that you could argue, hey, this should be causing some sort of move in the volatility index and fear. And it's just not. And I was curious about your thoughts on that. I mean, why when we have the potential for, higher rates from the Fed said maybe 2 more rate hikes this year, markets didn't flinch. We see riots in France, granted, that's probably not, you had that potential coup in Russia, markets didn't flinch, granted it was pretty much over, but why is that? And one of the charts I want to show here is mortgage originations by age. And again, the age is almost irrelevant to me. I'm just more focusing on massive amount of mortgages taken here, which was good because interest rates were really, really low. But one of the things, and this is always the rebuttal I get, well, if people got these loans at 3%, they're not walking away from them. But at the same time, I think people aren't taking into account the fact that inflation has skyrocketed, right? So you have to look at what these people now are paying for food, energy, all these other things, in addition to their home price or their mortgage payment. You also talk about if the labor market starts to crack. I mean, how much of this comes back to roost? And do we see a wave of people saying, yeah, well, I took a mortgage at 3%, but if you can't pay your 3% mortgage anyways, what ends up happening? There's this common kind of thought process with investors where it's like the cheaper it is, the better value it must be. And I do think people need to recognize that that's not always the case. You can play them for bounces, but valuation will have to figure itself out as we get regulation in here. And to be honest, it's very hard to figure out what the valuation of a Matic or a Cardano would be. If I flip just to the Cardano chart, I'll show you guys here. So basically, Cardano still hasn't broken out. Matic's starting to peak above the level here, but you can see that, again, Cardano is still up into this resistance, which is right around 30 cents. If it gets through 30 cents, you should head to about 33 cents, that longer-term down-sloping trend line. So yeah, it's kind of interesting to view. And again, I'm a much shorter-term trader, so just kind of taking advantage of these little moves and so forth. To be honest, I think Bitcoin dominance is still going higher. I know you're in the same thought process of that. And I think what investors need to recognize is that last week we got the SEC to say that the Bitcoin ETF filings for the spot were inadequate. And so just naturally, that's going to make Bitcoin investors a little bit more hesitant. And then I also think you have a lot of speculation. I mean, just going back to the stock market and tying the stock market in right now, the stock market has been so strong, like every day floating up, that eventually what people do is when everything, like you're looking at some of these stocks that have just gone parabolic, they start to look for what hasn't run. And so I think there's just this natural thing of saying, oh, well, these altcoins are so low, I'm just going to give it a shot, which just creates that little bit of a bounce. So you have the negative of Bitcoin with the SEC, even though it wasn't that big of a deal, saying that the ETFs were inadequate. And then you have this kind of risk on kind of thought process where you're then pushing the alts up a little bit. So at least for me, that's kind of where I am at. I have a chart here of excess household savings, and we can see that, you had this massive increase in savings in the COVID right in that beginning portion of COVID, and still it's coming down, but it's still working its way through, right? It hasn't, because people had so much savings, they're able to withstand and still continue to kind of buy things. But the other question then becomes is, as inflation, continues to take its toll, does that then weaken the consumer even more? But yeah, interesting chart there showing the surge in savings and then kind of the fade on it as it's coming back in here. Just based on purely the S&P chart, what we have here is you could see this upsloping trend line that actually goes all the way back to the COVID low. So if you take that low and you run it right through here to these highs, and it matches basically perfectly with these highs, we actually kissed that high right here before the latest pullback in the S&P, which was about a one week long pullback. And then what we're seeing here is we're rising again towards that same trend line. So I would expect that trend line, if we hit it, let's say later this week, it's not that much higher. I think it's about 20 to 30 points higher on the S&P 500. That'll be your next big resistance level. But again, for me, it's kind of looking at this, and I don't know if you have a chart on this, and maybe I should have given you a heads up, but I was wondering if you had the S&P 500 minus the top 7, the Googles, the Apples, the Microsofts, the Nvidias. It would be fascinating to look at this year, what's the actual return on the S&P if you take out 7 stocks? And I could be wrong on this, but I think the return is probably in the range of 3%.
Soloway predicts a big move to the downside for the S&P 500 due to the weaker dollar. He believes that the system is breaking, and we'll see the markets head toward a recession in the second half of 2023. Soloway notes a shift in investor attention from altcoins to Bitcoin, resulting in a surge of bullish sentiment. Soloway expresses concerns about the significant influence of tech stocks, which have seen remarkable performance, and highlights their elevated market cap and high price-to-earnings ratios, indicating a level of overvaluation he hasn't seen in quite some time. Soloway warns of the risk posed by a significant correction coming in the stock market, which could lead to a rapid 20% decline in the overall market. What do you think about Gareth Soloway's crypto and stock market prediction, and where we're headed in the second half of the year? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.